All right, guys. It looks like we're actually getting a setup now on the S&P, so it looks like a good time to do a video. This is Thursday night, overnight trading activity, and we have some news going on. Well, the political who cares news is that Trump, his tax reports may be released, and then now we're hearing like, probably not until after the election or whatever. But the real news is that I just checked out the balance sheet and the Treasury General Account they posted, and the Fed balance sheet is down again. This is 4 weeks in a row. Fed balance sheet is going down. It's actually below 7 trillion now. So it's actually going down. And the Treasury General Account has now flatted. It's not going up anymore, which is which is a really interesting thing to watch. If that Treasury General Account starts going down, then that means that they're pumping helicopter money into the economy rather than taking money out. The Treasury account has been taking money out of the economy for the past for forever. And now the Treasury General account is flattening and looking like it wants to go down. So in terms of liquidity, it's still just close to no liquidity on record. And this has been no liquidity for basically this whole period. The Fed balance sheet stopped going up and has actually been headed down. And let's take a look at this S&P. So we've been wobbling in this expanding zone for a long time now, and we finally made a break out of the zone to the upside, but failed. And now this kind of upside bull flag scenario has passed, and now we have gotten back into the boring zone. We're back in boring land. And now we've broken down and we've got a rejection into the boring land. So what I'm seeing here is just a bearish breakdown setup. And so for the bulls, first, we have resistance here relative to our previous top. This is not investment advice. Oh, and I'm putting this out through TradingView. So if you come over to youtube.com, that's where all of my videos are. I have hundreds of videos on YouTube. If you just go to mmtinvesting.com, that'll take you to the YouTube channel, and I'll put links in the TradingView comments. And then everyone on YouTube, yeah, please subscribe and chat in the comments, and we'll talk about everything that's going on. But on the bullish side, we have resistance here in the zone. We have resistance from this previous peak, kind of island top over here. And then we have real resistance here is uh, our 2-year bull market support trend line that comes off the bottom of the 2018 crash. So a lot of overhead resistance zones here for the bulls. And this bearish setup for the bulls needs to get back up right now. Yeah, so this is just overnight trading. We haven't started getting pre-market or anything like that. And so that's plenty of time to see some more activity before open. But if we open down and the cash trading is not immediately driving this thing back up above this area, then this is going to be a really bearish setup. Uh, and it's Friday, so just just today, and then we'll have a whole weekend to kind of sit. Um, but yeah, on the bearish side, there's not a whole lot in the way of resistance. And really, the next target is all the way down here where we have our long-term trend lines. And so this moving average, the blue line is a 120-day moving average, which is my favorite long-term moving average to use because it kind of hugs the action a little bit closer, but you still get to see the long-term trend line. And so this is still aiming down. It's still a bearish trend line, but we're above it in a bullish area. So, and we've bounced off of this thing a bunch of times, and now it's converging with our long-term support line, which this is a 12-year support line off the bottom of the financial crisis. And so that's it. I mean, that's the target. That's the target now, and It's possible to do that in a day. I mean, if you go back and you look at this previous peak over here from, yeah, from right here where it broke down, I mean, it made it all the way down to the long-term moving average in one day. This was one day it came all the way down. So that's, I mean, dramatic, but possible. It's possible to make it all the way down there in one day if it does make a bearish move. But you know, the action in this zone, well, it has been pretty dramatic when it moves down across the zone. Yeah, it has been pretty vertical. So I wouldn't be surprised to see a pretty big move. Although all the way down here that's a really big move. So yeah, this whole zone, I mean, just basically getting below 3,000 gets into the zone where there's tons of resistance on the bearish side. So that's kind of the target, is just to break 3,000 and get down here near these long-term support lines. And then as far as the market goes, the Qs have still been going up. So for an actual market move to the downside, like a real wave that lasts longer than, a couple of days, the Qs need to, will break down with the market or lead the market down. And they're not showing signs of doing that, the infotech stuff. But the small caps look like they're breaking down, and XLF looks like it's breaking down. So the sectors that have exposure to the solvency risks, that have exposure to the low interest rates, are looking weak in a way that matches up with the fundamentals. And then the Qs are looking strong in a way that is still kind of non-fundamental, sort of nonsense looking. Although this sector is still doing stock buybacks, everyone that says the Fed is pumping a ton of money into the sector, I mean, the balance sheet is going down, and it has been going down. It's been going down. The Fed balance sheet has been going down this whole time, and this sector continues to just blast to the upside. And yeah, so if we see a move down without the Qs coming down, then it should be a short-lived move down. But if we get a move down with the Qs, that could be a stronger move. So that's kind of the look for today. Just see if we're gonna get a down move, and then see if the sector rotation kind of reverses and we get the actual Qs coming down. So all we can see at the moment is the dollars, and the dollars are continuing to get stronger, which matches a little bit of a move down for now. And this yellow line I have down here, this is, I think it's a 10-year support line. The dollar has been getting stronger for 10 years. And so staying above this area here is not, it's still just the generic strong dollar scenario we've been in for 10 years. We really need to break down hard below this area, probably down toward 90, or if you could get the dollar into the 80s, then that is a real weak dollar outlook. If we got another move down like this from here on the dollar, like that would be a super weak dollar outlook that, could potentially be signaling higher interest rates, inflation, and we could see market fundamentals that would kind of match the inflation scenario. If the dollar just continues to go blah blah blah, wobble around, or go up a little bit from here, then um, yeah, then that's the same kind of dollar fundamentals that we've been in forever. And so right now it doesn't look to be changing, and we're getting near this kind of long-term support line. And yeah, and so a slight up move on the dollar, no big deal. And the yen is breaking down. So this has been leading down moves on the S&P recently quite a lot. Like all these big red days were the day before big down moves. So let's go look at the momentum on the S&P. So that's really all we can see right now on the overnight. As it does look like a bearish setup, it does look like bearish movements in the currencies. And let's take a look at let's go out and do the big one. So this is weekly candlesticks on the MACD here. And so we're getting very close to long-term bullish territory here on the MACD. And it's still diverged pretty far, so it's still pulling it up. And so this looks like it's going to make it into longer-term bullish territory, unless there's a really aggressive bearish move right now to pull this thing back down. But it looks like it's going to try to get up into bullish territory. And so, the bulls on the long term want to get up here and just stay on the top half. And it looks like it's going up there now. But if the bulls do not make it, if this turns down on the bearish side, then that would be very bearish long term to get sort of a rejection. And that's just the long term thing to look at. Not a whole lot of information on what's happening now from that. But this is the daily candlesticks, which gives us more of a couple month outlook. And so it's in bullish territory. It has been in bullish territory over the majority of this run. And it's just kind of stalling out and not giving much information. But again, the bulls want to stay up here and the bears want to break down here. And so it would be a crossover for the bears. And again, not too much information on the long term. It's just trending a little bit bullish long term. And then right now, in the next couple of weeks, I'm going to kind of flip through these. It's breaking down. It's breaking down, and it's breaking it down steep enough to be a real move. Yeah, okay. Yep, all the way down. And already bearish once we start getting close. So, yeah, so all the way from about 2 weeks down to right now, this thing has broken down and is in position to make an actual bearish move. In terms of the momentum, so looking at the momentum and the dollar is really the only signals I have now. This does look, from a momentum standpoint, bearish. From a technical setup standpoint, it looks like we broke down and rejected a bearish setup. And yeah, in terms of liquidity, which is pretty much the only fundamentals that have mattered recently, the liquidity is still flat to nothing. But so the Fed balance sheet is still coming down. So that's no money printing or whatever everyone's saying the Fed's money printing. They're not doing it this month. They haven't been doing it. So they've stopped buying things. They're just buying tiny amounts of mortgage-backed securities, and they have their bond buying list, but they're not buying a bunch of stuff now. They're just in position to buy things if they feel like they need to. And so that would probably come in reaction to a move down and not beforehand. And then the Treasury General Account, the now has stopped going up. So that is a huge thing to take a look at. If the Treasury General Account starts coming down, that means they're pumping helicopter money. And so we should probably know if they're doing that, where it's going. Like they're still paying out. Well, the PPP loans matured, right? So people can start laying people off now, but the unemployment benefits are still going to go until the end of the month. So that's one place where extra Treasury money is flowing right now, and we'll see probably soon if they're going to extend different benefits and things like that. But yeah, if we see the Treasury General Account make a big move without news of where they're spending it, that will require some research. But as of now, it's just kind of flattening out, and it doesn't look like anything too crazy yet. So yeah, liquidity looks pretty much like nothing, like no liquidity affecting the market. And we've just seen the market just chopping kind of down and sideways the whole time. There has not been liquidity over the last whole month. And so, yeah, yeah. So that, on the shorter term kind of outlook there. And then as far as fundamentals go, there's no indication that fundamentals will start actually mattering anytime soon. But if they do, like the Warren Buffett kind of fundamentals of price to earnings and those sort of things, if those start if those start mattering, that would probably be a serious, legit bear market. But just on this chart, like as far as the bear market goes, like if we got up here, that's actual bull market territory, and you'd probably see this momentum line start moving up. And there's a lot of resistance to get up there now, and not a good technical setup for it. But right now, there's a good technical setup to get down. But for a bear market, we need to get down here below this 12-year bull market support line and break down below it. And once we've broken down below here, and this is, the 2900s, if we get into the 28 range down here, then that's actual bear market territory. And then, you can take another look at everything. But if it does get all the way down into the bear market territory over the next whatever week or a couple of weeks or something like that, then this would be a real bear market area. But as for now, we're just kind of in between bull and bear market. We have a mix of signals. Like we have bearish VIX, and we have a downtrending long-term line, but we're above it in the bullish side. We're in between these two big support lines on the shape of the formation of the bubble, kind of in between. We're below a support line, which is bearish, and we're above a major support line, which is bullish. And so it's not long-term bull or bear market territory. We're just in between. And that's where we are. We're still in between. But I thought this would be a good time to put a video out through TradingView and just kind of take a look at the S&P, because this does look like a technical setup for a pretty big move down that could happen today. And so that's the outlook for Friday. And this will post automatically over to the YouTube channel, so come check it out on YouTube. Subscribe and hit the like button, drop some comments. And this is not investment advice. This is just an idea from TradingView. And so if you have questions on any of the other things, I mean, as far as kind of trades, these are the sectors that look, like a short trade that would actually happen. Is the Russell 2000, the IWM, has all of the exposure to the bankruptcies and the solvencies, and not support from bond purchasing and bailout kind of things. And then the financials have all the risk from the super low interest rates, which I did actually look at the interest rates, and they are going up. It's from like 0.05 to 0.08 as of, the first of this month. So maybe we're seeing a hint of an inflationary move. Probably not. It's too small. Like it needs to actually make a move up or down in the interest rates to be interesting. But right now it's just hanging out near zero. And the long term, I mean, they were saying like 2 years it could be near zero, and they don't know. They're just waiting to see. They're waiting to see if the interest rates trade up or down. The Fed doesn't know which way it's going to go. They're just kind of waiting to see which way it's going to trade and see how they can react, and then where they have to kind of position the interest rates in response. But right now, we're not getting the big inflation scenario that everyone's talking about, or the deflationary scenario that like Raw Paul or like Brent Johnson talk about. We're not getting either one yet. Just have a technical setup with a little momentum for a down move today, and that's about it. There's not any long-term macro stuff that is setting up or making sense yet, but maybe we will get something like that over the next couple of weeks. And happy trading, And oh, I'm gonna get cut off. So yeah, have a good Friday and